Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491 432 6556. Or you can also scan the two QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe to channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email home.nguyen@vcsc.com.vn with the phone numbers +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàn Kiếm District, Hanoi, Vietnam. And today I'm gonna share with you the Vietnam Strategy 2023. Let's continue with Vietnam macro rising external and domestic headwinds. About the consumption, retail sales growth hit an 11-year high. According to the GSO's estimates, total retail sales of goods and services was 5,680 trillion Vietnam dong, $241 billion in 2022, more than 19.8% year-over-year, which was the highest growth rate since 2011. If excluding price factors, real retail sales growth hit a historic high of 15.6% in 2022. Although retail sales growth in Q4 2022 decelerated, it was still rapid at 7.1% year-over-year, compared to 20.9% growth in 9 months 2022, which was partly thanks to a low base in 2021. The nationwide social distancing period ended in early October 2021. However, services activities did not fully resume in Q4 2021. Nominal retail sales of goods, which made up nearly 80% of total retail sales of goods and services, increased 14.4% year-over-year in 2022. Robust growth was recorded in retail sales of educational and cultural products, more than 22.9%, garments, more than 19.1%, and transportation vehicles, more than 13.8% year-over-year. Notably, retail sales of accommodation, catering services, and tourism soared 52.5% year-over-year and 271.5% year-over-year respectively, thanks to the strong recovery of outdoor and tourism services, especially domestic tourism. Nevertheless, international tourism has not fully recovered. In 2022, Vietnam welcomed 3.4 million international arrivals, equivalent to 20% of the pre-pandemic level. 18 million in 2019, with December's arrivals at 40% of the pre-pandemic level. International visitors in 2022 mainly came from South Korea, accounting for 26.5%, Asian countries 25%, US 8.7%, and Japan 4.8%. Meanwhile, Chinese tour visitors only accounted for around 3% compared to 30% pre-pandemic as a result of China's zero COVID measures. Compared to the pre-pandemic level, total retail sales of goods and services increased 15.2%, with retail sales of goods increasing 19.8%, and retail sales of accommodation catering services, meeting the pre-pandemic level, while sales of tourism were only at 55% of the pre-pandemic level. Outlook, according to S&P Global Survey, declines in new orders, especially new export orders, caused manufacturers to reduce their staffing, which was evidenced by the employment cut in December 2022 being the sharpest in 14 months. The slowdown in the labor market could dampen retail sales growth in H1 2023. Nevertheless, the global support combined with controlled inflation should help to enhance retail sales in 2023. In addition, we expect the tourism sector will continue to recover strongly in 2023, especially with the return of Chinese travelers. State budgets. The economic recovery supported state budget revenue in 2022. According to the Ministry of Finance, preliminary estimates total state revenue was 1,803.6 trillion Vietnam dong, $76.4 billion, more than 15% year-over-year for full year 2022, which was 15% above the annual plan. Meanwhile, budget expenditures trailed behind at 1,562.3 trillion Vietnam dong, $66.2 billion, more than 8.1% year-over-year, only fulfilling 87.6% of the full year target and leading to a budget surplus of 241.3 trillion Vietnam dong, $10.2 billion. However, we note that some state budget spending thus allocated in 2022 will continue to be dispersed in January 2023. Therefore, these estimates are not full year 2022 budget data. Robust state budget revenue was thanks to a strong recovery of all economic activities and high global crude oil prices. Meanwhile, the disbursement of state budget expenditures was relatively slower, especially spending for investment and development. In 12 months 2022, spending for investment and development increased 22.2% year-over-year to 435.7 trillion Vietnam dong, $18.5 billion. However, it only fulfilled the 82.8% of the annual target. Outlook. According to the Ministry of Finance, 2023 plan for state budget that was approved by the National Assembly, budgeted revenue and expenditures are projected at 1,620.7 trillion Vietnam dong, $68.7 billion, and 2,076 trillion Vietnam dong, $88 billion, respectively, resulting in a fiscal deficit of 455.5 trillion $19.3 billion, or equivalent to 4.4% GDP in 2023. Of this amount, the Ministry of Finance expects to spend 726.7 trillion Vietnam dong, $30.8 billion on investment and development, including capital from the fiscal stimulus package approved in early 2022, up 66.8% compares to the estimated spending in 12 months 2022 and 38.1% higher than the 2022 plan approved by the National Assembly. We expect higher fiscal spending will have to offset the negative impact of global slowdown in 2023. FDI disbursement hits a record high in 2022. FDI disbursement increased 13.5% year-over-year to a record high of $22.4 billion, which was roughly in line with our full year 2022 forecast of $22 billion. Meanwhile, FDI pledges fell 11% year-over-year to $27.7 billion. Of the total FDI pledges, registrations for new projects dropped 18.4% year-over-year due to disrupted feasibility studies of new projects caused by the pandemic. However, registration of additional FDI projects, expansion of FDI projects currently in Vietnam increased 12.2% year-over-year. Notably, Samsung, after a very long period of absence, announced two additional investments in Vietnam. Samsung Electromechanics factory in Taiwan, $920 million in Samsung Ho Chi Minh City CE complex, $841 million. The manufacturing sector attracted the highest restricted FDI of $16.8 billion, contributing 60.6% of total FDI pledges in 2022. Manufacturing was followed by real estate, $4.5 billion, contributing 16.1%, and utilities, $2.3 billion, contributing 8.2%. Singapore led FDI pledges in 2022 with total restricted capital of $6.5 billion, accounting for 23.3% of the total, thanks to the Vietnam-Singapore Industrial Park project in Bắc Ninh, $941 million. Singapore was followed by South Korea, $4.9 billion, accounting for 17.6%, and Japan, $4.8 billion, accounting for 17.3%. Solid outlook for FDI inflows. We expect FDI disbursements to remain solid, increasing 7%, 8% per annum to $24 billion to $26 billion in 2023 and 2024, equivalent to 5.5% and 5.4% of GDP respectively. We also expect improving feasibility study activities for new projects that were disrupted by COVID-19 will boost FDI commitments in 2023. In addition, we expect a continuing shift of investment from China to Vietnam as multinational companies continue to diversify production locations to reduce supply chain concentration risks in China, and two, as trade tensions between the US and China, especially in the tech sector, are ongoing. Also, the recent upgrade of South Korea-Vietnam ties to a comprehensive strategic partnership could further boost bilateral trade of the two countries as well as in investment into Vietnam. LG has recently revealed that it is planning to invest an additional amount of $4 billion into Vietnam. Moreover, we believe Vietnam's advantages, such as its geographic position, large young population, competitive labor costs, and a long list of free trade agreements could continue to attract FDI inflows in the medium to long term. Trade 2022 trade surplus hit the second highest level ever recorded, thanks to the strong recovery of production activities from a low base in 2021. Vietnam's exports and imports surged 17.2% year-over-year and 12.8% year-over-year respectively in 9 months 2022. However, weak global demand and a relatively high base in Q4 2021 negatively impacted Vietnam's trade as exports and imports declined 6.1% and 3.9% respectively in Q4 2022. For the full year 2022, Vietnam's exports and imports amounted to $371.9 billion, 10.6% year-over-year, and $360.2 billion, more than 8.4% year-over-year respectively, with a trade surplus of $11.2 billion, which was the second highest level ever after the record high of trade surplus of $19.9 billion in 2020. However, according to the GSO, export and import prices increased around 7%, 8% year-over-year due rising global inflation in 2022, which made a large contribution to the growth in Vietnam's trade by value for the year. The key drivers for the exports recovery in 2022 were machinery and equipment, $45.7 billion, more than 19.3% year-over-year, footwear, $23.9 billion, more than 34.8% year-over-year, textiles and garments, $37.5 billion, more than 14.5%, and electronics, PCs, $55.2 billion, more than 8.7% year-over-year. However, exports of mobile phones and spare parts, the largest export product, only edged up 3.1% year-over-year to $59.3 billion in 2022 due to a 14% year-over-year plunge in Q4 2022. Many other export products declined in Q4 2022, including machinery and equipment, less than 4.6% year-over-year, textiles and garments, less than 8.9% year-over-year, and iron and steel, less than 59.5% year-over-year. On the import side, electronics and PCs, $82.1 billion, more than 8.6% year-over-year, and crude oil and petroleum products, $17.4 billion, more than 87% year-over-year, were the key import drivers in 2022. However, imports of machinery and equipment, $45.4 billion, less than 2% year-over-year, and mobile phones imports, $21.2 billion, less than 1.2% year-over-year, declined in 2022, mainly due to their respective shortfalls of 16.2% year-over-year and 18.1% year-over-year in Q4 2022. The U.S. remained Vietnam's largest export markets as exports to the U.S. amounted to $109.1 billion, more than 13.3% year-over-year in 2022. The U.S. was followed by China, $58.4 billion, more than 4.5% year-over-year, and the EU 47.1 billion US dollar, more than 17.4% year-over-year. However, in Q4 2022, Vietnam's exports to the US dropped 12.7% year-over-year to 23.9 billion US dollar, while exports to China 17.2 million US dollar, more than 0.5% year-over-year, and the EU 11.4 billion US dollar, more than 1.1% year-over-year, inched up. Meanwhile, the top three sources of Vietnam's exports were China, 119.3 billion US dollar, more than 7.9% year-over-year, South Korea, 62.5 billion US dollar, more than 11% year-over-year, and Asian countries, 47.2 billion US dollar, more than 14.7% year-over-year. We note that these numbers are the GSO's preliminary estimates. The official data to be announced later by Vietnam Customs could show some substantial variance. Outlook: trade activities could remain weak in H1 2023 before rebounding in H2 2023. We expect Vietnam's exports and imports to remain weak in H1 2023. However, a global demand recovery could help to support a rebound in Vietnam's external trade in H2 2023 and 2024. Therefore, we cut our export and import growth forecast for 2023 from 7.5% and 8% to 6% and 6.5% respectively, equivalent to a trade surplus of 10 billion US dollar. We expect a strong recovery in 2024 as we forecast exports and imports rose at 14% and 13.5% respectively, equivalent to a trade surplus of 13 billion US dollar. According to Bloomberg's consensus forecast, global GDP growth is expected to slow to 2.1% in 2023 compared to 3.1% in 2022 and then rebound to 2.9% in 2024. Also, GDP growth of the US, Vietnam's largest market that accounted for nearly 30% of Vietnam's exports in 2022 could decelerate to 0.3% in 2023 from 1.9% in 2022 and then recover to 1.3% in 2024. Slower growth is also expected for Vietnam's other key export markets such as the EU, Japan, and South Korea in 2023. We expect almost all Vietnam's key export products will experience decelerating growth. However, exports of electronics and PCs could be supported by the product diversification of multinational high-tech companies. Apple expects to produce MacBooks in Vietnam in mid-2023, and Samsung could produce semiconductor chips in Vietnam in July 2023. In addition, China's economic growth is expected to recover to 4.9% in 2023 compared to 1% in 2022, according to the Bloomberg consensus. We expect China's recovery to partly mitigate the negative impact of the slowdown in the US and other economies on Vietnam. Vietnam's top export products to China include phones and cameras, PCs and electronics, foods and agricultural products, and textiles, garments, and footwear. However, given the current global economic conditions, we expect demand for stable goods like food and agricultural products could experience a more significant benefit from China's reopening than other categories. Inflation remained under control despite surging oil prices. As of December 2022, Vietnam's CPI increased 4.55% year-over-year. However, average CPI in forward year 2022 remained under control at 3.15% year-over-year, while average core inflation rose 2.59% year-over-year. Key drivers of inflation in 2022 include average domestic petroleum prices jumped 28% due to a surge of global prices, contributing 1 ppt to the increase in headline CPI. Increased prices of construction materials caused CPI of the housing and materials category to rise 3.1%, increasing headline CPI by 0.59 ppt. In the contrary, average pork prices dropped 10.68% year-over-year, which have to curb headline CPI by 0.36 ppt. Moreover, in order to limit the impact of surging global oil prices on domestic inflation in 2022, the government implemented a series of policies such as a reduction of environmental taxes on domestic petroleum products and maintaining or even reducing prices of several services under the government's price management. Outlook, we expect average CPI of 4% in 2023 and 2024. We expect average CPI of 4% in 2023, which is higher than 2022's results, but below the government's target cap level of around 4.5%. We expect higher inflationary pressure in 2023 and 2022 compared to 2022 that will arise from domestic factors, including at the beginning of 2023, the National Assembly Standing Committee raised environmental taxes for petroleum products, with the environmental tax for RON 95 increasing 1,000 Vietnam per liter to 2,000 Vietnam per liter. Accordingly, the price of RON 95.8 at petrol next increased by 5.3% to 21,800 Vietnam per liter. In addition, after several years of keeping prices unchanged or even reducing prices to support the economy, the government could hike price of services, including electricity prices, tuition fees, and healthcare, among others. However, external factors could be in favor for domestic inflation due to the following seasons. According to Bloomberg's consensus forecast, global inflation peaked at 8.8% in 2022 and is expected to cool down to 5.2% in 2023 forward and 3.3% in 2024 forward. Cost push inflation caused by global commodity prices could ease in 2023. We expect the average Brent oil price to fall to $90 per BBL in 2023 forwards, less than 9% year-over-year, compares to an average of $99 per BBL in 2022. Foreign exchange. Aggressive Fed rate hikes place pressure on the US dollar Vietnam dong exchange rate. In 9 months 2022, the Vietnam dong performs relatively well compared to other currencies. The Vietnam dong depreciated only 4.3% against the US dollar in 9 months 2022. However, the Vietnam dong depreciated nearly 4% compared to the US dollar in October 2022 due to one, the Fed's aggressive rate hikes to combat the US high inflation and strengthening US dollar, and two, the situation at Saigon Commercial Bank, which caused the SBV to pump liquidity into the system and place pressure on the US dollar Vietnam dong exchange rate. Nevertheless, the Vietnam dong later regained strength toward year-end and narrowed its depreciation against the US dollar thanks to the following. The DXY US dollar index dropped by 7.3% in November to December 2022. Improved sentiment in the local foreign exchange markets as US inflation cooled. Solid foreign inflows from FDI disbursement, $5.3 billion in November to December 2022. A trade surplus, $1.3 billion in November to December 2022. And the impressive return of F2 net inflows, $1.3 billion in November to December 2022. Marking top two highest monthly levels since May 2018. As of year-end 2022, the US dollar and Vietnam dong traded at around 23,600 in the interbank markets, equivalent to the Vietnam dong depreciating 3.4% against the US dollar in full year 2022. Nevertheless, the Vietnam dong's performance in 2022 was stronger compared to the currencies of Vietnam's major trade partners, including the CNY less than 7.9% against the US dollar in 2022, Euro less than 5.8%, KRY less than 6.1%, and JPY less than 12.2%. The SBV sold a large amount of US dollar to defend the dong. According to Bloomberg IMF data as of end of September 2022, Vietnam's foreign services dropped to $87.6 billion compares to $109.4 billion as of end 2021. We estimate the SBV sold around $3.5 billion in Q4 2022, which could lower its foreign reserve to around $84 billion as of end 2022, equivalent to around 2.6 months of imports. Outlook. We expect the US dollar and Vietnam dong exchange rate to remain stable in 2023 and 2024. The Fed's rate hike cycle is reaching its peak with Fed's expectation of a terminal rate of 5.1%, which is equivalent to a 75 basis point hike in 2023, while the US dollar is expected to depreciate by 2.7% in 2023 and 3.2% in 2024, according to Bloomberg's consensus forecast. In addition, we expect solid foreign inflows from FDI remittances and merchandise trade surplus and narrowing service trade deficits, thanks to return of international tourists to support the SBV in managing the US dollar Vietnam dong exchange rate. We also believe the SBV could rebuild its foreign reserves to 96 billion US dollar in 2023, equivalent to 2.8 months of imports and 116 billion US dollar in 2023, equivalent to 3 months of imports. And that's bring me to the end of my presentation about Vietnam macro, rising external and domestic headwinds. If you want to open a legal trading account, don't hesitate to contact with us. Read information on the screen so that we can assist you. Like, subscribe, and follow our channel to receive the new video. So thank you for listening and see you next time.